Hey everyone, welcome back to the channel. Following up on the last video we did calculating PayPal's WACC, we're going to go ahead and calculate revenue out for the next decade. So what I've done is I've pulled in their balance sheet going back to 2017, and we can see net revenue, two lines for COGS, all the way down to net income. And, not bad, profitable company for sure. Um, Looking pretty attractive from that stance, but we'll see how the DCF shakes out. So to look at the revenue, the only way they really break it out in their 10K is they give us transaction revenue and then revenues from other value add services. We can see that this kind of like went up and now it's slowly coming back down. I'm not sure how this is really gonna kind of play out. I think this is really gonna be they offer they offer like loans and credit cards and just different kind of random services that they charge like smaller fees on. So that's really what this is, and it seems kind of all over the place. So we'll just hold that flat. Oops, not flat. We'll just hold it flat, or maybe we'll just have it grow with like inflation. So like 2.25. Let's just do that. I think that that's like a safe assumption, right? Because it's maybe they start focusing on this more and it grows more. Maybe they don't. But 2.25, basically, we're just saying they're just going to keep this line of business growing with inflation. Kind of gets rid of a lot of the noise in the business. But really, the big part of the business that's going to drive the value is the transaction revenues. So to look at this, they provide us total payment value. So this is, the amount of payments they process on their platform. From there, we can calculate the percentage revenue they generate. So right, we're gonna take transaction revenues divided into this total payment revenue, and you can see it's actually been decreasing. It's gone from about 2.6 down to 2.1%. So they're actually taking a little bit of a lower percentage now than they were 5 years ago. 5 years ago, though, they were still part of eBay, I think. We could actually, when did PayPal get carved out? PayPal separate from eBay? Because I know eBay, right? You paid like an 11%, spun it off in 2015, so 5 years ago. So I mean, over time, right, less and less people I know eBay even introduced a new payment feature now outside of PayPal. But right, I believe when you used to check out on PayPal via eBay, it was like a 12% fee, and you had to go through their you had to use PayPal back then. So I think that's probably part of it is they were getting a really high fee from the eBay traffic. Obviously, that wasn't all the traffic, but I think that can explain a little bit of the declining percentage here. And then maybe they've just slowly lowered their fees over time to stay competitive with the likes of Venmo and I actually think they own Venmo, to be honest. I could be crazy, but I think PayPal owns Venmo. So I think there's a lot of yeah, owned by PayPal. There's a lot of competition in the mobile payment space, so they're probably trying to reduce fees to be competitive. So this is going to be one of our bigger assumptions is this percentage. And if we just look historically, right, it's gone down what 10, 14 basis points a year, roughly 15%, 10 to 15 basis points a year. Um, Now, does this continue to go down? You know, 2.5 basis points. Oh, I need to add one more zero. Um, maybe this continues to go down and we continue to see pressure in the space. I don't know. It's been definitely trending that way, right? So maybe we continue to see this go down with, you have Shopify out there, you have Square, you have Toast, you have all these payment processors. So it kind of is a race to the bottom here. So maybe we do see this price kind of continue to drop as volume goes up. But we'll see. So total payment volume, we have this as a calculation here as number of payment transactions divided by average or times average payment size. And this number of payment transactions is driven off of the active accounts and the average transactions per account. So I think these are kind of the important factors to really go off of here. And I think for account growth, right? So I mean, they have 400 million users on their platform right now. That's pretty big, but definitely still room to grow. So let's see. They've been averaging what 17% growth. And let's just look at, I actually think they provide us a revenue split by region. So it's the schedule. Okay, so US, right? And this is going through 2018. So we can see US is actually growing pretty strong. but then um, UK and other countries is actually not growing as strong. But that was actually, let me go to their most recent filing right here. Cool. So I mean, yeah, US is still pretty strong top line growth. UK is still growing strong. Other countries is growing strong too. So um, are they in China? They're probably not in China. I'm gonna guess they're not. Mm, they do have a payment platform in China. That's huge. So based off this, I'm gonna say their user base is probably capped at the world population of whatever, 8 billion. So based off that, I think, expecting them to continue this like high user acquisition is probably not unheard of. Get them up to 2 billion people in a decade, right? By then, the world population is probably gonna, oh, I don't want that to be a rolling average. So maybe we'll just set it to, and it probably tails off at some point, right? And doesn't continue to grow 17% every year, but who knows if they acquire other companies, things like that. Could definitely see it happening, especially because they've seen this, pretty strong growth here. I mean, I guess they dipped a little bit in 19, but then a huge surge in 20. Um, so maybe for the first scenario here, just kind of leave it like this, up to 2 billion people. That'd be about a quarter of the world currently, but in a decade, I mean, how fast does world's population increase? Let's see, 83 million annually. So you're talking an extra, you know, billion people almost on the planet in the next decade, roughly. Um, but obviously, there's a really old generation that's gonna, might slow that number. But if we call it 90, right, 900 million people, we're gonna 9 billion people on the planet. Having 2 billion might be a little bit big, but who knows? Could be possible. But that might be a bit lofty. And if we look at the average transactions per account, so it looks like more people are using it more frequently. Um, and obviously, look, we had a really big user growth here. And when we saw that, we didn't see the number of transactions grow quite as high, but that's just because these new users are probably doing less transactions. So if you were to, normalize out the average transactions per account, it's actually probably gone up significantly. And if we actually look at it here, it's payment transactions, it's growing pretty steadily still there. So um, maybe for this, we just set it at like 1%, just because we do have a very healthy growth in users assumed here. So if there's that large user growth, we have to assume the transactions, gets diluted over that bigger base of users. But to me, this at first glance, these numbers seem a little up there. So this might be a little high, but yeah, I mean, this has us going to 96 billion in revenue, and 5xing, and to me that seems high. So maybe what I'll do is, as this gets larger, we're going to say it's harder for them to keep up the growth, and then they kind of tail off to like a 5% growth company. I think that, and a lot of people say I'm over conservative, and that's fine. I would agree, but right, you have revenue going from 20 billion to 53 billion in the next decade, um, increasing 50% over the next 2 years. You know what I mean? I think that that's still a pretty healthy clip of growth. Especially, in the last 5 years, they've only doubled their revenue. So if they, you know, added another 10 billion in the next 5 years, which is kind of what we have projected here, that's kind of that same growth they've experienced previously, and then kind of really accelerate. Yeah, I mean, I think that that's probably pretty reasonable. So let me just add a total revenue line here. Actually, no, that'll calculate on the other page. So I guess that'll do it for our revenue video. I think that, feel free to download this model and tweak the assumptions, right? If you think average payment size is going up, which, I mean, it looks like historically it stayed pretty similar, and then this year it went up. I would maybe equate that to the pandemic, people buying more online, buying groceries online even now, using PayPal to check out instead of going to the grocery store. Um, so I think holding that steady might be fair. You could increase this at the rate of inflation, and obviously that's going to help your stuff more, right? Because if you're just like the average cost of goods is going up, then yeah, maybe this goes up 2% a year, and it's going to help your top line. But definitely download it. the cells in blue are the ones that you're going to want to edit to tweak this model. You could set this up in a number of ways. You could get rid of the average transactions per account and just look at the payment transactions in total. You could do something like that and then look at the um, average payment size. You could do it off a factor of that. But I think looking at the user growth is interesting because then it kind of gives us that baseline of world's population, really, since it sounds like they are in China. So I think that'll do it for now for this video, and then we'll link up the DCF in the next one. Thanks for tuning in.